In this example video, we are going to look at brief exercise 932, and we're going to put together a cash budget. So we're looking at a company that's a pizzeria, and they tell us that their sales for the month of October are budgeted to be $157,000. They tell us that 85% of their sales are typically in cash and the remainder is on account. On average, they have a 2-month collection process for any on-account sales. So in the month of the sale, they collect 70% of those on-account sales, and the remaining 28% is collected 1 month later. All of their food and supply purchases are all done on account, and in the month of October, they expect to purchase $116,000 of food and supplies. They pay 25% of their on-account purchases in the month of the purchase, and 75% 1 month later. They tell us that their work is mainly done by the owners, who in total withdraw $6,000 a month from the business. And they also have some various part-time workers that in total cost them $7,300 a month, and they are paid for their work weekly. So on average, 90% of their wages is paid in the month that it's incurred, and the remaining 10% is done in the following month. Their utilities average $5,950, and their rent is at $4,100. They also have a quarterly insurance payment that is due in the month of October of $1,200. And then they give us the information for September, that their sales were $181,500 and their food and supplies purchases were $130,000. And then we had a beginning cash balance as of October 1st. So the first thing that we need to do is we have to determine how much cash the company is anticipating collecting in the month of October. So in October, they said they're doing $157,000 in sales, and they anticipate that 85% of those sales are going to be in cash. So that means at the point of sale, we are collecting cash immediately. So that's going to take us in $133,450. For September, we did $181,500 in sales. 85% of those are assumed to be in cash, which only means 15% is done on account. And remember, we have a 2-month collection process. We usually collect 70% of our on-account sales in the month of the sale, and we collect 28% 1 month later. So in October, again, the $181,500 was the total sales. Only 15% are done on account. And 1 month after the sale, we collect about 28% of that. And then we have our on-account sales for October. Again, in total, we did $157,000 in sales in the month of October. 15% of that was done on account, and we collect about 70% of that in the month of the sale. So that would give us a total of $157,558 that we're anticipating collecting in cash in the month of October. We also need to look at when do we have to pay for those food purchases. So again, right here in step G, they told us that we had $130,000 that we purchased in food and supplies in the month of September. We pay 25% of our on-account purchases in the month of the purchase, and we pay the remaining 75% 1 month later, which of course would be October. So we're going to have to spend $97,500 to pay for the purchases that we purchased last month. They tell us that we anticipate buying $116,000 in food and supply purchases in the month of October, and we pay 25% of that in that same month. So in total, we're going to need $126,500 in cash available to pay for those on-account purchases. So now we can utilize that information to put together our cash budget. So we do have a beginning balance. They said our opening balance on October 1st is $2,147. We plan to collect right here $157,558. So that gets us a total cash available in the month of October of $159,705. Now we need to look at how much cash we plan to spend. So we plan to spend $126,000 in paying off our account payable food purchases. They tell us that our owners in total withdraw $6,000 from the business. They tell us that our other workers in total make $7,300 each month. They get paid 90% of that $7,300 in the month that they work, and the remaining 10% 1 month later. So since they are making the same amount every single month, that $7,300 is not changing. We're paying 90% of it in 1 month, 10% in the next. It comes out to 100%. We're still spending about $7,300 to pay our employees. They tell us that our utilities are estimated at $5,950. Our rent is at $4,100, and our insurance is at $1,200. So we plan to have to spend $151,050 in cash. So the difference between our cash available and our total disbursements tells us what our ending cash balance would be, which in this case is $8,655.